gave you that entrepreneurship kakida that made you, start something in Dubai? So over to you.
Perfect. So I think going backwards, that Keda is difficult, right? You hope that the Keda does not bite you. It's
True.
bitten me twice. It's bitten me twice now. This is my second venture.
True.
You make a product, whether zero experience or 23 years of experience, the product is new when it hits the market. So
Hello and welcome to a brand new episode of Fintech Baatse. In this episode, we have with us Mr. Satinder Aggarwal, founder and CEO of EQBAC, a very unique investment tech platform that allows Indian investors to invest in global assets via various fintech platforms. Mr. Satinder has been an industry veteran in the investment space in India and then later on in the Middle East and has almost over 2 decades of experience. Having said that, Mr. Satinder, thank you so much for joining us today and taking out the time. It's a pleasure having you here.
pleasure indeed, Shreya. This is good. Thanks for opening up this content to the audience. This is so relevant from our scheme of things. Yes, we are a startup, and startup getting this kind of audience through your platform is amazing. Thanks for getting this lot working for us.
It's always a pleasure having you. And as far as I've kind of seen the pulse of things recently. I think global investments has been kind of trending, and a lot of Indian investors, specifically the HNIs and the Gen Zs and millennials, are kind of looking at wider avenues to invest in, and that is essentially where a more systemic influx of players who are able to orchestrate that journey kind of well comes into play. And I'm pretty sure our audiences are excited to know what's happening behind the scenes in this industry. But before we dive into that, let's take a step back and understand a little bit about you, the founder, in our first segment, the founder story. So, without further ado, over to you, Mr. Satinder. Would love to hear about your journey, how your career progression has been, and kind of what gave you that entrepreneurship kakida that made you, start something in Dubai. So over to you.
Perfect. So I think going backwards, that Keda is difficult, right? You hope that the Keda does not bite you. It's
True.
bitten me twice. It's bitten me twice now. This is my second venture. So
Right.
being on the advising side, financial advisory domain for 23 odd years now.
Mm-hmm.
India with Stancy, Yes Bank branch capacity, so was in charge of branches, but mostly on the wealth management side of it. Then
Mm-hmm.
joined Karvy, headed the Bombay vertical for Karvy, HNI, Ultra HNI space.
Mm-hmm.
Fortunate to get promoted in 2013 to head up the Karvy's international vertical that was based out of Middle East in Dubai.
Mm-hmm.
2016 was my first founding venture, Sigiro. So that's where the first skill bit me in terms of setting up my own venture along with two co-founders. So we set up Sigiro, $300 million of AUM, 250 guys that we imported into Dubai from India. Well, that's where the talent is. And then obviously picked up the local talent from Dubai to set up Sigiro. Uh, so advising space was exciting all throughout,
Mm-hmm.
handling larger teams, advising clients directly as well. What was happening in Siguro is that the team size was growing multi-fold day in, month on month, quarter on quarter. So a lot of infrastructure was getting added up. Products we had 8 team, operations we had 15 odd team, compliances we had a different structure, dealing with multiple platforms, multiple products. So numbers kept on increasing there. That's where we
Mm-hmm.
thought let us kind of build up something digitally which can solve this particular piece, which typically happens with the advisory firm which kind of sees the northward journey. They want to create their own tech, own wealth tech. But our differential was we were creating a wealth tech on the dollar side, and we thought to bring dollar, India, all of that together. So
Right.
that's how equity basket was formed.
Nice.
So I just thought to kind of complement my India experience, overseas experience into this tech that we got created. That's a bit about it.
Super interesting. And when so before this, you kind of ran something called Seguro, right? Which was
Yep.
also into investment side. So like, what was that about?
Advising space, Karvy
Mm-hmm.
Private Wealth prior to that was advising space. Seguro was into advising as well.
Mm-hmm.
But we kind of increased the advising not only on the wealth side. We started doing advising on the real estate broking, on insurance solutions, on corporate insurance solutions, on SME broking, corporate loans. But all of this was advisory. So we have advisory team, we have advisory layers. This advisory layer used to get their own clients, reach out to those clients for their wealth requirement. Client says we don't have wealth, or take loans or loan requirement there. Businesses were there, so they required some bit of a loan. So we started kind of increasing vertical by vertical, from a wealth division that we started off, increasing to real estate broking over a period of time. So
Hmm.
was completely on the advising space into operating out of Dubai. So through NBFC without their own lending book is what we created Sigiro. So this is what Sigiro was about.
Awesome. Thank you for sharing that. So, in the experiences that you have had from Yes Bank to Karvy to kind of starting something of your own, what essentially went through your mind when you kind of were in your last corporate gig and kind of decided कि नहीं यार अभी ये सब छोड़ छाड़ के खुद का चालू करते हैं? Like, was there any specific what do you say, like, there are some certain sparks or certain inspirations that trigger such decisions, right? Maybe some people have that really passion for that specific problem statement that kind of sticks with them. Some people are this is something, entrepreneurship is something that I want to do, and I'll figure out what kind of works for me. So how did it kind of play out for you?
I would say I was fortunate to have good bosses. While I would kind of keep my talent bit aside there. Yes, everything has to kind of blend in together. Fortunate,
Hmm.
right from my Stancy, Yes Bank, Karvy days to kind of work with bosses who could listen to me, who gave me that hearing time, so that whatever ideas I had sounded good to them in terms of implementation. So when they moved me to Dubai, 2013, the team size there was relatively small, 4 5 guys is what we were operating out of that. The idea
Hmm.
was to kind of consolidate whatever we had and increase the team size. So we started adding people there. And as we started adding people, and as I was very, very new to the international market, started realizing that a wealth advisory outside of bank in this part of the world, Dubai internationally, does not really exist. It was more of an insurance led advising industry, or there were private banking who was talking to their clients on private banking solutions. Obviously, the requirement there was $2 million plus thereabouts. So that affluent HNI, semi ultra HNI segment was not really getting catered to, which we started
Hmm.
catering through the Karvy's office in Dubai.
Right.
We could grow. We were slowly adding team size. Five became 25 in couple of years. So then things started looking brighter. I said 25 can become 250 as well. So we
Hmm.
kind of started putting up a proposition within Karvy that let's kind of increase the team size. So a couple of quarters, a year passed by, but that proposal kind of really didn't fly off enough. So maybe they still wanted to consolidate further instead of kind of taking the next plunge. But by
Hmm.
that point of time, there was so much energy within us, within the team, that we were just wanted to kind of take it to the next level. So
Right.
then that's where we took the plan. We started looking for investors. We were fortunate to get investors that kind of time. So we plugged in
Hmm.
investors, we plugged in the regulatory license that we required, and all seemed to work. So it was just sheer passion of trying to achieve what we were doing consistently, rewardingly into a very niche premium market, made us
Hmm.
believe that it's a good time for us to take the plan. So it was not an overnight decision, but the decision which was
Hmm.
backed by performance data, and things seemed to work at that point of time. That okay, let's kind of get everyone together and set up
Right.
Seguro. So that was the first plunge.
Understood. And kind of a bit of segue from there, right? What the question that really I get from a lot of entrepreneurs, specifically someone who's just wannabe entrepreneurs or aspiring entrepreneurs, so as to put it correctly, is how do you kind of plan your life for the next couple of years when you know that you're not gonna get that consistent cadence of cash inflow, right? Consistent salary coming in. So from that perspective, any kind of tips or views to share for the audience?
No format per se there. Whether you want to pick up funds at pre-seed, seed, idea stage, Series A is obviously far off there. No particular format to it. It's basically
Hmm.
that people that you're taking the idea needs to believe in you more than they believe in that particular idea. So
Right.
if you have set of people that they
Hmm.
look up to you and you look up to them as well, that's where your idea will float and that's where your idea will get money initially. So a pure startup who thinks that 6 months, 9 months of a business will get me an investor. I think possibly that's a wish list. So you need to kind of, moment you start off a business, you need to kind of look at your reserves, whether your reserves are good enough for 2 to 3 years from that particular perspective. So that you need to kind of keep plugging in, keep plugging in, and
Hmm.
a business should not be a passion business in terms of cash outflow. So that has to be a very dear resources because that can suddenly get drained out. So that's kind of a catch 22 situation, whether you put in too much money initially or whether you really plan your runaway for that much period of time. From an investor perspective, they are very difficult. They have a very different perspective.
True.
Some might say a zero traction, a good idea, a good MVP is created. You put in money. Some might not be interested, even if you put in 100 million kind of a number there. They might still want you to do a 200 million number from that particular
Right.
perspective. So no particular template. You need to kind of be planned of your resources of a 2 to 3 year zone, and you need to have your investor checklist ready on day one itself.
Hmm.
These are the set of investors that you will keep on approaching. Don't wait for the MVP or the product to get ready.
Makes sense. Makes sense. At least the conversation should be started and kind of taking the feel of things from that perspective.
Yeah, yeah. Especially when you know that you would want to raise money, so you need to have a startup with those 8, 10 names in your mind that this is the kind of names that you would reach out on day one itself.
Hmm. Makes sense. Makes sense. Perfect. Also, from a since you come from a background wherein you have built this company grounds up in Dubai, if I'm not wrong, right?
Yep.
EQBAC. So, how essentially is the startup landscape there compared to it's as of now how we have seen India grow, and specifically because I think you are one of the first companies that I've hosted that has been founded outside of India and built outside of India. So I think that will be a very unique perspective for the audience to have.
Absolutely, it's unique for us also. We also didn't figure out. We started off from Dubai, and now our central action happens to be out of India. So we're
Hmm.
talking from an Indian audience perspective, and India becomes the main holdco company as we move forward. As far as the ecosystems are concerned, I think you will have more opportunities, more doable and a transactional, executional based startup from India, not being biased to Dubai and Middle East part of the world. But the sheer market size that the India presents, it is very difficult to fail in India. If the product has some value, it will find out its own consumers. So from
True.
that perspective, just the sheer market size makes a the big difference from an India, Middle East or Dubai perspective.
True.
That's one particular zone. The ecosystem in terms of investors, I think those are pretty much there from an India, Middle East perspective. While let's say from a Dubai, it is growing. A lot of money currently is getting attracted in India. So if I present my case to a Dubai investor, presenting them a Dubai-based company vis-a-vis an India-based company, I might get a larger chance if I talk only from an India perspective.
Oh.
So there is so much of an attraction to an emerging economy like India that
Hmm.
India becomes precedent in every scheme of things. More on the startup domain.
Understood. Understood. And from a ecosystem perspective, when we talk about, let's say, the presence of incubators, accelerators, and anything that is required for an early stage startup to kind of be handheld and be taken forward, how does it kind of pan out there? What kind of ecosystem is present there?
I'll restrict myself to Dubai and I would
Hmm.
compare that from an India ecosystem. I think India ecosystem is much, much more evolved. And many players are there from an India perspective. Dubai has,
Hmm.
but I would say maybe three, if not two, from that perspective. So these are that limited player ecosystem which offers you incubations and acceleration, hand holding vis-a-vis what is available in an Indian market. Every region, every city in India has those setups up and flourishing to handle the startups there. So it's the sheer size of the economy which this geography is present.
Hmm. Understood. Fair enough. Uh, I mean, a bit of a segue to kind of what the normal course of conversations would be, since this is also a unique perspective. A lot of Indian founders, here look at Middle East as a market wherein they would want to kind of expand, get into, and kind of scale. especially the ones that are in B2B fintech. Having built a company there, how do you see the market evolving there, and what perspectives do you think the founders are maybe right on or maybe missing? And how do you kind of see the ecosystem actually evolving?
It's product driven. If the product has a universal appeal, then you should look at an overseas market definitely.
Hmm.
uh, Whatever is getting consumed in India is getting consumed globally as well. The local
True.
taste and the flavor across product range will vary. So if you have a Dubai or a Middle East perspective, Dubai happens to be a central locations from that particular zone to kind of reach out to overseas market. Uh, you need to kind of obviously the cost will multiply big time. Uh, Suddenly that you're looking at a tapping into overseas market. So if you have an India leg and now you want to kind of set up a Dubai piece, there has to be that much more research put in as far as the costing piece is concerned.
Hmm.
So a fly by night works initially. You don't really have to set up your complete infrastructure in Dubai to cater to the markets here. I think for the first 3, 6 months or a year, you can kind of do a fly by night visits to this part of the world and try to base up your market instead of
Right.
taking the plunge to set up your shop. So that can be the first approach. Do a
Hmm.
beta testing of the market and then kind of take that particular piece. And yes, it's a premium market. So Dubai not only makes you reach out to UAE, definitely it's part of UAE. The entire Middle East and Africa opens up for someone who is based on Dubai. So even from our perspective, we started Dubai, Mauritius, and now we are moving into India. And our target geographies remains India, UAE, and Africa. So these are the regions that we will target in the first 2 years. So we are not looking at the entire Middle East. We are talking about India, UAE specifically, and Africa. These are the markets for first 2 years is what we will play out.
Makes sense. Makes sense. So I think that really kind of adds a unique perspective when you kind of say that, if essentially a company is based out kind of starts operating in Dubai or kind of gets based out of there, the entire even the Africa as well as kind of the Mediterranean area as well kind of gets opened up for them. From a market perspective, I think that really makes sense for a lot of Indian companies that are operating in B2B segments. Specifically, and what I have observed is companies working in your B2B payment infrastructure and those kind of, and we have seen a lot of those migrating to, wouldn't call it migrating, but setting up shop in Dubai to kind of
Yeah.
expand the market. So that also opens up, as you said, the additional markets as well. I think that's enough of a segue outside to kind of understand the Dubai ecosystem. Coming back to the founder story piece, in your entire journey of building EQBAC, what was that moment kind of when when you felt key, that aha moment, this is gonna work, this is actually gonna work, this is gonna scale up.
But so it was conceived while I was in my first venture, Sigiro. So we
Hmm.
had an in-house problem. I would say problem. 300 million of AUM, 250 advisors, so many product teams, so many operations team, product
Hmm.
providers, all doing manual Excel-based work, uh, doing physical KYC paperwork, and we were having an eye on India, that how India is evolving, how KYC in India is getting paperless digital.
Right.
Unfortunately, this part of the world, that particular system didn't exist. So
Hmm.
a lot of drainage was happening on the back end side of it. So we wanted to kind of plug in that. So that's how
True.
EQBAC was formed. That's how we kind of thought, let us create our own in-house build tech to kind of aggregate the product providers, the custodian banks, the digital infrastructure that we are creating in terms of opening up client accounts based anywhere across the world. So that's how we thought to kind of solve our in-house problem by creating this tech. And as and when the tech started getting built up, as and when we started throwing up that much more use cases onto the tech, it
Hmm.
dawned upon us that people down the street, advisors down the street, whether big, medium, or small, is possibly running with the same problem.
Right.
uh, Clients across the globe, product providers across the globe, banks based somewhere, the advisors could be somewhere. How do they literally manage the KYC of client moving across the border, attestation of those KYC across the border,
Hmm.
sending that KYC now back to the provider? Provider then says, fine, this is good enough for me to accept, or it rejects and sends the courier back. It was chaos completely. So we thought this is the problem we are solving for ourselves with the 300 million odd of AUM that we were handling. If I take this product outside and just kind of trying to pick up $1 million to $10 million of an AM of an advisor, get those 400, 500 advisors in the first 2, 3 years of with us, we would be sitting good. We would be sitting good with an half a billion kind of an AM just on a platform on a transaction basis. So as we were building up use case, it started dawning on us. Let's not restrict this product in-house. Let's take this product outside. That was during the built-up state, during the developing stage. It was not a thought process that we are making this product for a B2B to be taken outside. It was made for our own in-house consumption.
Mm-hmm. So the problem that was kind of faced internally by that by Seguro kind of also resonated with the larger ecosystem, and that is when you felt this is actually going to work for other organizations as well, and it's a larger problem statement that needs to be solved.
Absolutely, absolutely.
Perfect, makes sense. I think that is super interesting. Specifically, when we kind of talk about, and I would love to kind of deep dive into this with you in our next segment, wherein you talked about how the KYCs kind of move across the border, how those validations happen, and those that come back. That seems like a very tedious process when specifically when you mentioned couriers and that actually moving physically. I'm super excited to know how it kind of happens through your platform now. Having said that, before we wrap up this last segment of ours, uh, this segment of ours, one last question for you, essentially from this perspective that uh, you know, since a lot of budding entrepreneurs are kind of watching this episode, what would your three key takeaways be for them?
Oh, confident. You need to be very confident about what you are getting into it. Basically, the product, the proposition, the value proposition in front of the client. Investors and all obviously is a second piece altogether. But whatever you're building up, you need to be very, very confident about that. That's the key piece from that particular zone. Second piece is patience. You need to kind of completely have patience in this journey. Uh, I thought 23 years of my experience, my own personal piece, 23 years of experience, I'm making a wow product. I'm kind of trying to solve a problem which is there across the street. Moment I take this product in the market, people would be waiting for me. Doesn't happen.
True.
You make a product, whether zero experience or 23 years of experience, the product is new when it hits the market. So it needs that many more eyeballs. It needs that many more patience, that much more time to kind of run across the various ecosystem, right from product providers, right from your distributors to the clients. They want to see you that much more often. So,
Hmm.
and that requires time and patience. While there would be advertising and marketing spend to it, even after that, you need to kind of be there in the market for a longer period, and you need to have patience from that particular zone to continue to live that particular product.
Perfect.
Third
No, I think.
third
Sorry,
piece
go
is
on.
obviously the costing side of it. You need to have a larger runway. That's where the patience will work for you. So as
Hmm.
long as the runway as lower cost initially and not blow out completely at the initial stages, I think that's where hopefully all the starters would be able to kind of take.
That's very well put together, and thank you so much for sharing that with our audience. Having said that, I think it has been a very inspiring and very interesting journey that you've had. Thank you so much for sharing that with us. We'll kind of come back together in our second segment, Zindagi Baat, to deep dive into what's happening in the global investment space and what EQBAC has built. Thank you so much.
Thanks, Shreyas. Thank you. Pleasure.